Hello traders, this is day number 40 of small cap market open trading. I've written a plan specifically to trade small cap stocks, which are notoriously volatile and unreliable, but also a favorite of new traders to trade, and they often cause them to blow up their account. So my idea here is to have a plan in place that's relatively easy to follow, that allow you to take 100 trades or even more without damaging your account. And then you track those 100 trades, and if you're profitable at the end of those 100 trades, then you can increase your position size. So for now, we're just trading one single share while we're tracking those trades, and that's how we keep the account safe. So far we've taken, I believe, about 58 trades of this plan right now, and it is profitable so far, but I want to take it out to 100 trades to make sure that it remains so. So let me show you the screener, and I'll show you how I pick these stocks each day. So I use my small cap screener, click those three little dots and click modify, otherwise these filters will not be applied. Then I organize the list by volume, and I'm looking for stocks that are trading with 500,000 shares or more right at the open. So it's a lot later right now, so that's why there's a lot more volume. And then I want to see a percent change of 5% or more. And then there's some specific chart criteria that I look at. But here, this is a great example. I just noticed this of why volume is not necessarily the end all be all. I do like volume, and I prefer to see more volume than the average volume. But here's a case: NRXP has a ton of relative volume. It normally has 3 million shares, so we're well over 10. We're almost 20 times the normal volume being traded. But this thing has fallen off a lot since the market opened, because I believe it was up around 50% right at the market open. So just wanted to point that out, that just because you see something with crazy volume compared to its average volume doesn't mean you just go all in or trade it just for that simple fact alone. So this one was one that I didn't even consider trading, because when I pulled it up on the daily chart, you'll see in the video here that it does not meet the daily chart criteria. So here's NRXP, and it's trading below the 200 MA on the daily chart, so automatically it gets rejected. And that's the beauty of having a trading plan that tells you exactly what to do, how to do it, and when to do it. Is I just pull these ticker symbols up, and if it meets the chart criteria that's written in my trading plan, then it stays on the chart. If it doesn't, I reject it, and that's it. So you can see I no longer have NXRP on the chart. So let's keep going. There was about 4 ticker symbols, or I guess 5, that I was watching, but only one of them actually triggered an entry. The others didn't really even come close. I guess SLI started to, but it was way behind GOGL as far as how quickly it was triggering an entry. So GOGL broke out through its previous high, established the first high of day, and now it's pulling back from the second high of day, and this is where I get triggered to take an entry. Again, this is all written in my plan. I don't have to decide whether or not I want to trade it or whether or not I want to take an entry. If it meets all of the criteria in my trading plan, I just do it. So it's a very systematic way of trading, and that way my statistics are actually meaningful, because it's something that I can reproduce every single day. If you're doing random things and just trying to kind of have a gut feel of whether or not you think a stock is going to go up or not, that's a really hard thing to track and to figure out if you're going to be able to do that every single day. So this is a systematic approach to trading, and this is the only way that I know I can count on my trading plan being profitable in the long run, as if I could do it the same way every single day. So anyway, I'm looking for 937, and as soon as I see that, I trigger my hotkeys. There you see my hotkeys are triggered, and that automatically, I have my hotkeys set up. I have a video on that, by the way, that shows you how to set those up, and it automatically throws out a minus 10% stop loss and a plus 20% profit target. And then the most important thing to do once you're in the trade is to move that stop loss in place right away, because with these small cap stocks, really it could happen on any stock. If there's volatility, if there's a lot of volume that day, it could turn around and flush down on you in no time, and you might take a lot larger loss than you planned to if you did not get your stop loss in place right away. So I put my stop loss at the low of this consolidation area, and that's because this thing just kind of went sideways here. So it's not going to go below the low of the previous candle. It goes to the low of the consolidation area. That way I give the stock a little bit more room. It doesn't always work, but it makes sense. There's a logical reason why the stop loss is where it is. So this is trade number 1, and let's see what happens. So once I'm in the first trade, then I disregard all the other ticker symbols that I was watching, and I just focus on this one stock. I can take up to 3 trades per day. So if this trade fails, I can enter 2 more times to see if I can get a 2R trade. That's what we're holding to right now is 2R. We're also tracking 3R profit target. So that means 3 times my risk or 2 times my risk. And you can see that this thing's pretty much just chopping around, going sideways. Once I'm in the trade, I don't worry about that. I just let the trade play out. So there you see now it's running up. It looks like it's going to hit my profit target, no problem, but it doesn't quite do that. It starts to turn around, come down against me. And hey, that happens sometimes. Sometimes it goes all the way to the profit target, either on the cent or -1 cent, and reverses and comes down and stops me out. And if that happens, so be it. Then that goes down in the spreadsheet and we track that. That's just the way it goes sometimes. So let's see what happened here. We are 2 cents. We got 2 cents shy of the profit target. And we do get stopped out on that trade. Let me show you that in real time. But here's an interesting thing. And again, this is all part of the plan. The plan says that if I do get stopped out, let me show you the stop in real time. If I get stopped out, then my plan says take the next entry as long as the price doesn't go below this point of weakness, which is this red line on the chart. That's where I've decided that the stock has gotten weak if the price comes down that far. So now I'm just waiting for a reversal here and a 1-minute candle to make a new high. And as soon as that happens, then I have to get back into the stock. Now, the interesting thing this morning was that it happened on the the following candle. So it happened quickly here. Whoops, let me just show you that entry in real time. So here we're at 9:35. As soon as I see 9:36, I have to get in according to my plan. And there you see me trigger my hotkeys. I get filled exactly where I want to. Get that stop loss in place. That is the most important thing. This is almost the same exact trade as the previous one. The previous one I was in at 9:37 and my stop loss was 9:32. So this is just 1 cent lower. And this is a kind of a weird scenario, but this does happen occasionally, and I don't worry about it. Again, I just trade the plan and let the statistics collect over time and tell me, what works and what doesn't. So again, this has probably only happened one other time since I started trading this plan. So you might look at this and say, obviously your stop was too tight, but I would argue that no, that was a logical stop loss at just below this consolidation area. And you'll see just as many times or more where the stop loss will get hit and the price will continue down and never return or, come up and oscillate all the way down throughout the day. So this was a scenario where my stop loss got hit on the money, and then I got triggered to take the next entry, and let's see what happens as this day went on. So this was just kind of a slow trade. Sometimes these happen where it just kind of oscillates around. And again, once I'm in the trade, I don't worry about it. I just let it do its thing, let it play out, and don't judge it. And now you can see here we're getting a pop. But my cutoff time for trading and even watching the charts is 10:30. So if 10:30 gets hit, I just shut down the platform and I let my profit target and stop loss orders do their thing. So you're going to see me stop recording here at 10:30, and the orders are still in place. We did not close out of the trade, and I'll show you in real time here where the chart is, and I'll show you the orders, and you could see what happened here. So what was that ticker symbol again? Let's see if it's up here. Well, it's not going to be on the single chart. There we go. Sorry about that. GOGL. So you could see where our entry, this was our second entry right here. So our first entry was for the break of this candle here, and our stop loss was just below that candle, and we got stopped out over here, and we got triggered on this next candle, and our stop loss became the low of that candle, or just below the low of that candle, I believe. And our profit target got hit, looks like around 11, probably 11 o'clock, 11:03. So, and it also looks like our 3R target may have gotten hit. Let me just open up the calculator here. We'll check to see if our 3R target got hit. So we were in that time at 9:36. Stop loss was at 9:31 and 9:51. So not quite. And Let's see, the stop loss has not been hit yet though, so I'll have to check it later today. Usually if my 2-hour target gets hit, the 3-hour target gets hit as well, but of course not always, so I'm going to be tracking that data into the spreadsheet. So that line signifies where our 3-hour target was. But you can see our 2-hour target got hit, and we did get filled there. I do have the orders up here I can show you. So there was our first trade of the day, and that was the one that we got stopped out on. And then the second trade, we were filled at 936, and then we sold at 946. So that was a 10-cent per share profit on that trade, and that was at 1103. So that's it. No more trades for the day. I'm scrolled all the way to the top, so you can see that's my last trade. So let me know if you have any questions about this trade or any others. The main message that I want to deliver in all of my videos is that you really need to have a trading plan to trade from, and you should follow that trading plan exactly the same way every single day. Otherwise, you won't ever know if the trading plan works or not. Then you track those trades, and after 100 trades, you can increase your position size. But until that time, I strongly suggest that you trade with one single share. Otherwise, you're going to get emotional about the amount of money you're losing, and before you've even given the trading plan a chance to work or not, you're going to change it. You're going to change something, thinking it doesn't work after 10 trades. That's just not enough to get statistical or meaningful statistical data. So you really do need to take 100 trades or more and track those trades, and then you'll know whether or not what you're doing is working. So as always, go into every single trade with a plan and stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.